Greetings to you all FSCO students, ladies and gentlemen. Hope you guys are good. Hope you guys are well. Welcome once again to the FSCO 3.0 Key to Financial Freedom. Yes, in this lesson, guys, I'm going to be giving you guys a key to financial freedom, right? So without any further waste of time, I want to jump into the first lesson. But before we even go anywhere further, I want to start with my introduction. So for those of you who don't know me, I go by the name of Emmanuel Tumero Mabitela. And for those of you who already know, you can follow me guys on Instagram. And my handle is ims underscore no limit underscore. Hope you guys are ready for this wonderful journey. One thing I can promise you guys is once we are done with all our lessons, you are definitely going to be a professional trader. You're going to be getting the key on how to become a consistently profitable trader. So first things first, guys, I want you guys to know that I am a third year student, CA, and I've been trading the forex market for the past 6 years. So I have 6 years trading experience, and I'm the founder and director of FS Code Forex Trading Academy. Like I said before, I'm here to help you on how to become a consistently profitable trader. That is what I specialize in. So before we move anywhere further, I want to basically cover the topics I'm going to be talking about in today's lesson, which is your trading edge, your expectancy, and your trade frequency, not forgetting why all of these things matter. And for those of you who might not see what we have on the screen, I will just move my video to wherever I find fit. And don't forget, guys, you can also find the PDFs down in the description of the video. We're going to also be giving you guys our recommended brokers. And at the same time, once you guys stay tuned, take out your pen and paper and get ready for a nice warm lesson. So the first thing I'm going to talk about today, guys, is of course your trading edge. What should a strategy consist of? What you need in order for you to be a consistently profitable trader is a working edge. All of this will be unnecessary unless you have a working edge. Remember, this you can develop yourself, or to cut your learning curve shorter, you can learn a strategy from a mentor of your liking, such as FS Code. And if you're already here, you are not at the wrong place. You are definitely in the right place. I'm going to be covering as well your entry and your exit confirmations. Not forgetting, guys, I'm going to be going deeper a lot on exit because that's where people are struggling as well. And for those of you who want more depth in terms of how to basically go about your entries, there's going to be lessons on that will be covered under our strategies chapter. So guys, when we talk about entry and exit confirmations, I'm going to firstly start with the exit. You not knowing where to exit, it's going to make you lose out on a lot of profit. So when it comes to exit, before you even take a trade, you will need to know exactly where you will be exiting. And I personally use a method that is called a charting stop. I'm going to show you guys a demonstration on how to use a charting stop. And we use a 1:2 or more risk to reward ratio, meaning that we're going to have a fixed stop loss and a take profit. And this allows me to keep the process consistent. The aim is to be a consistently profitable trader. So now when we talk about having a risk to reward ratio of 1:2 and having a charting stop, I'm going to show you guys an example quickly. I just want to show you guys how to basically spot a charting stop, right? Let's say, for example, we are going down on a downtrend. And as you can see, guys, the market is going on a downtrend. And from there, we're starting to get some bit of reversals. So what I'm going to do here is, like we've taught you before, I'm just applying a bit of trends. It doesn't have to be perfect because I'm just showing you guys as an example. I'm just going to let this be as a stop loss hunt or something of that nature. So what we're going to talk about, guys, what is a charting stop? A charting stop is, let's say, for example, you want to take an entry. Let's say I want to take an entry at this time and moment. When we talk about the risk to reward ratio, it's making sure that my stop loss is always smaller than my take profit, and my take profit it's more than my stop loss. That way, I'm able to maximize my profits, because the more I win, overall I'm gonna have a trading edge. Like I said, guys, it's important for you to have a trading edge. Now when we talk about a charting stop, it's basically having a stop loss in a way that it's invalidating your setup, right? So for example, if I put this here, I can basically move my stop loss below this area, because I know once I cross below this area, the market will go again towards the downside. So I'm putting my stop loss not because of a fixed pip, but where it's deeming my trade to be invalid. You know what I mean? Let's say, for example, we have a different scenario once again. Let's say the market is basically pushing above. We are on a bullish momentum, and once we are going bullish, and so the market starts going towards the downside a little bit, and as you can see, we are breaking a bit towards the downside, right? So what I'm going to do is I'm going to put this in a trend. And similarly, as I did before, as you guys know, I can adjust to put it in a way that we cater for most touches. And what I want to do now is show you guys how does this thing work. Let's say, for example, we can see that from here going on forward, I have these levels. I'm putting these levels for you guys to understand exactly what I'm trying to explain at this particular time and moment. So at this level, guys, this is more or less my reversal area, right? As you guys can see, let's say I wanted to take a sell trade from here. I took my sell trade. My stop loss will be obviously above this area over here, and my take profit will be more or less around this area, right? And the reason for that is that having my stop loss here, I'm using a charting stop, because should the market push above and go back at this area, we are back inside a bullish trend and the market will invalidate my setup. It means that should the market push back inside and reach this area, actually cross above the previous high. This was at some point a previous high. It was a resistance. Once we cross the resistance, not only are we back inside our bullish trend, but we're also back on our bullish momentum, meaning that the sell is no longer valid. So I'm using a method that is called the charting stop. Let's say, for example, you're using a fixed pip, right? If you're using a fixed pip and the market is basically 10 pips from here, you're gonna be able to get stopped out. Maybe the market was just testing here and you're gonna lose out on profit. It needs to be at a place whereby the market invalidates your setup and not because of a fixed pip. Now, going forward, guys, we're gonna be looking at entries as well. When we talk about entries, guys, we need a clear and a solid plan for where and how you'll enter the market. And for that, we're going to be covering it under our strategies clause. What confirmations must you see before taking a trade? These rules needs to be consistent and doesn't need to be complicated. Like I said, guys, it's all about the strategy you're going to be applying. We're going to be sharing with you guys the strategies that we use when we trade the Forex market. You just have to make sure that you stick to the rules. You stick to the rules that you have to apply for your trades, the rules that you're going to apply for your entries, and make sure you keep the process simple. The more complicated it is for you, the more harder it is for you to be profitable. Now I'm going to continue with the next slide. So as I told you guys, I'm going to firstly start with covering our exit strategy, right? And when we talk about the exit strategy, guys, that is basically the biggest tip you need for your trading psychology. As you guys know, psychology is basically the biggest aspect when it comes to Forex trading, guys. Psychology carries a lot more worth than technical and fundamental analysis combined, because with psychology, that's how you're able to become a professional trader. When it comes to Forex, we have two steps. We have your ability to analyze and trade, and that is basically you using your analysis skills. But another thing, which is the biggest, is how to grow an account. Now, when we talk about how to grow an account, we're talking about you following your system. We're talking about you being prepared mentally. We're talking about you being able to manage your emotions, because that is where the biggest battle is. Especially when it comes to forex trading, guys, you can actually see that your psychology will be tested a lot more than your technical skills. Have an exit strategy for your trades when you enter them, or rather before you enter them, because like I said, guys, you need to know exactly where you're going to exit. As I showed you on my illustration, I already knew if I make an entry where I'm planning to exit, because I need to know how to not lose out on specific profits. I know some of you guys have been in a situation whereby your trade is in profit, but it then reverses and goes to hit your stop loss because you didn't predetermine your exit strategy, you didn't predetermine your exit area. So it's very important for you guys to know where you're going to enter and where you're going to exit. Now, guys, being able to have an exit strategy is very important, because this way you aren't leaving exit up to the last minute emotional decision. Like I said, guys, we're trying to remove our emotions from trading, which usually will be the wrong one. Yes, guys, when you trade using emotions, you're gonna lose most of the time, because the market will try to play you psychologically. It will try to get you to be involved emotionally, and that is where you're gonna start to lose. Obviously, there are many times where the market conditions can change drastically and you may be justified in an early exit, but this takes time and experience to know, and it's something that you shouldn't do until you've proven to yourself that you can stick to a more rigid trade exit plan. Like I said, guys, before you can adjust yourself in terms of exit, I want you to move from a beginner phase. I want you guys to move from an intermediate phase before you become an expert. I want you guys to stick to your rules first before applying such things, because this having an early exit usually will require you to be a bit more advanced, because you understand market structure, you understand everything that we've taught inside 3.0, and that takes a lot of time as well. It's easy to learn, but the experience is also necessary, and with experience, that will take a little bit of time. So predefine your exit at a risk reward of 1:2 or greater on every trade you enter and simply stick to it. Like I showed you guys, whenever I took an entry on my illustration, I already knew where I'm going to enter and where I'm going to exit. I predetermine all those levels looking at the past data. My past data will show me the levels where the market usually reverses. So I'm going to use all those reversals areas to know exactly where I'm going to expect the market to reverse, so and so forth. You know what I mean? So you'd be surprised how far just a little bit of self-discipline and consistent adherence to a predefined plan goes. Guys, I want you guys to know, the more you stick to your trading plan, the more you stick to rules, the more you instill discipline, that's when you're going to see success within the markets. The most successful trader is not the one who's the smartest, but the one who's the most disciplined. Now to the next slide, guys. The strategy that you have needs to be physical. Hope you guys can see it. The strategy you're going to use needs to be what? Physical. Always have your plan written or clearly typed out. Keep it somewhere where you can always see or access it, right? Remember, it does not need to be overcomplicated. The simpler, the better. As I told you guys, your strategy needs to be very simple. You need to have a simple set of rules that you're going to follow, meaning that will take away a lot of guessing games, because the more complicated strategy is, the more harder it is for you to take the trade, and you're going to make your trading experience very difficult. So make sure you have a strategy and you know the rules of a strategy better than anyone. You need to know the rules of a strategy better than anyone out there in order for you to become a constantly profitable trader. Next thing you need to have, guys, is a mindset plan. Have some form of strategy or plan for recognizing when your mindset is causing trading errors, right? That way, guys, remember, you are trying to eliminate your mistakes. Losses are part of the journey, and losses are there to actually help us learn. So those of you who repeat mistakes, you are failing to learn where to improve. So whenever you have a mindset plan, you're trying to carefully note down your mistakes so that you get to not repeat them, because you are going to take a few losses. The only aim that you need to have is not to repeat the mistakes. The fastest way in order for you to become a professional trader is to avoid unnecessary mistakes. The person who learns on how to overcome the mistakes is the person who will be a lot more closer to being a professional trader. Now, identify certain triggers that cause you to underperform and understand what they are. Like I said, guys, every trade you take, if it's going to be a loss, you need to carefully see what went wrong, note down the problem, and see if you can find a way to overcome whatever's holding you back in order for you to see more profitability in the future. Next thing, guys, you need to have a defined risk management. It is always said, but a lot of traders still fail to use proper risk management. I've seen a lot of people, guys, who want to change their life with only one trade, and that is the best way to grow your account. I want you guys to understand, guys, if you want to be a trader, you have to decide to become a trader, because you can easily become a gambler from a trader. A gambler is a person who's going to go all in on one trade, and once the trade goes against them, they've lost all the money because they fail to use proper risk management. The market doesn't know who you are. The market doesn't care about you. The market only wants you to apply the rules. Remember, guys, this is the game. We don't make the rules. We just play the game. So if you learn on how to properly apply all your skills, you are not going to struggle in terms of you becoming a professional trader. Now, you need to know exactly what you are risking per trade. Usually, this is not more than 1%. So if you have $100, it's very important for you to stick with 0.01. If you have $10 or $50, it's also very important for you guys to stick to proper risk management. Don't rush to increase your lot size. Increase your lot size once you are more skilled, because you'll be understanding a lot. And that being, there's high probability trades, there's a medium probability trade, and there's a low probability trade. The high probability trade is a trade where you can increase your lot size just a little bit. With the medium trade, you're going to go with the medium lot size, and with the low probability trade, you're going to use high proper risk management, and that is 0.01, because you are very unsure with the trade. And for you to be able to tell what kind of a probability of a trade you have, you need to know confirmations. Confirmations come from your entry points, and your entry points come from strategies. So the more confirmations you have on an entry, the stronger the trade is going to be. Start lower when learning or losing. Like I told you guys, when you start trading, you're gonna start with a smaller lot size. That way you are able to not lose a lot of money when you take losses, because that's the fastest way to learn. When it comes to you learning how to trade forex, you're gonna take a few losses, but you need to make sure that you don't lose a lot, because whatever loss you take in forex, you lose your money. Right? Every mistake that you make in forex, you pay with money. So we're trying to make sure that you are using small risk. That way you can learn all that you need to know with the minimum cost invested, because losses are actually the cost of running your business. The moment you become a trader, you're going to see this as a business. Losses are part of the running costs of your business. Now I'm going to continue, guys, to the next slide. Now we're going to talk about expectancy, guys. Now we have expectancy. Trading is not a get rich quick scheme. I want you guys to understand, trading is not a get rich quick scheme. Please don't approach trading like a gambler, because you're going to have a gambler's results. Gamblers are not consistently profitable, and gamblers are not able to stick through the trading journey. If you become a gambler, the market will definitely push you out. If you become a gambler, you will definitely give up along the journey, because you will not see any form of success. People have different seasons of succeeding in forex trading. For some people, it can take a month, 2 months, 3 months, 6 months, or even a year. Right? I want you guys to understand that success comes differently to everyone, because we are all dealing with different psychological challenges. And I want you guys to know that there are also those who are going to need 3 years, 4 years, 5 years, or even more to master everything and to be good at the art of trading. Please don't rush yourself, and don't let anybody rush you when it comes to you mastering your forex journey. Please, I want you guys to stay patient, and I want you guys to always remember that it's important for you to trust the process. Whatever your time frame or season is, you need to be patient. Build your dream upon patience. Yes, guys, like I've been saying, you need to be patient when it comes to forex trading. Forex trading is actually a high income skill, so it will definitely take a lot of time for you to master, because this is a skill that pays a lot of money, and it's not going to be easy to master. But once you've mastered the skill, that's when you're going to see that you're going to be having a wonderful lifestyle, and many people, they're going to wish that they took the journey with you. Trading is not easy. To learn it, yes, it can take a short period of time, but success in anything worth having is tough. Like I told you guys, forex trading is a high income skill. So when we talk about a high income skill, we're talking about a skill that is difficult to learn. For example, it's easy for me to replace somebody who is a cleaner. That kind of skill is not difficult to learn. Hence, it's easy for you to get replaced, and it doesn't pay a lot because of the effort it takes to learn that skill. Now, when it comes to forex, you become highly valuable because the skill you have is difficult and it takes a lot of years. So for some people, obviously, can take a year. Some people can take a little bit more. But those who are able to acquire the skill, they are going to be earning with regards to the value they've put in. And that is how important it is for you to learn the skill. There's one skill that nobody can take away from you. Once you learn the skill, you're going to be forever profitable, and you're going to be able to live from anywhere you want in the world, and you're going to be able to be your own boss. Now, the only difference in trading is that most people focus on a dream rather than trying to understand the reality. Yes, guys, many of you guys come to forex trading because of the lifestyle, but you need to know that before you even get to the lifestyle, you need to master the business side first. You need to master a business, because the lifestyle is the fruits of the labor. Like I told you guys, if you are approaching forex trading as a journey, you're going to understand that it works exactly the same way as a tree. What is the last thing to come from the tree? It's definitely the fruit. So you must actually wait out for your tree to grow. Don't let anybody force you to eat your seeds. You need to let your tree grow until it comes to a point where it bears your fruits. That's when you're going to enjoy your lifestyle. This is a journey, guys. You need to actually go and walk the path before you can actually get the benefits. Remember, you're not going to become profitable overnight. It takes hard work, dedication, perseverance to be under the top 10%. Yes, guys, the reason it's top 10% is because many people fail to actually undergo the real journey of you becoming a professional trader. The reason it's only 10% is because this 10% decided for themselves that they want to be successful traders, and they decided with themselves that they want to take this long, brutal journey that will bear a lot of fruits afterwards. Now, ignore everybody who's telling you about a get rich quick scheme, a holy grail, a robot that make profits constantly. Those things don't exist. Yes, guys, those things don't exist. Whoever promises you you're gonna make money within a day or two, those people, guys, are promising you guys a dream. That's not how forex trading works. When it comes to forex trading, guys, it's very important for you to know that you're gonna need to be patient, and you're gonna need to trust the process, because that's how long it takes for you to become profitable. This is not something that you can learn overnight. This is not a get rich quick scheme. Forex is like any other industry. Like you've seen, guys, for a doctor to be a doctor takes a few years because it's also a high income skill, so it does take that long. So when it comes to Forex, the similar concept applies. It's also an industry of its own, and you need to also put in the work of the industry. The hustle doesn't lie, the hustle pays you with regards to the amount of effort you've put in. So remember, guys, those things don't exist. Just focus on reality, be determined, and focus on the long term. There's a reason too many traders give up too quickly when reality hits. Yes, many of you guys are drawn into forex trading by the lifestyle, and you're gonna basically have a very rude awakening once you see what it really takes in order for you to be a successful trader. You just need to talk to yourself, agree with yourself that you want to take this journey, you are investing in yourself, and I promise you guys, you will not regret it. Now, to become a success in any profession takes a lot of years of hard work, and trading isn't any different. It's just more accessible. Trading is actually more accessible as anybody from anywhere in the world can become a trader by just simply downloading the MT4 platform. But if you really want to take this seriously, you're going to need to know that there are no shortcuts in this journey, guys. If you take shortcuts, you're not going to make it. Let's say, for example, you want to have a baby in the next month. You can't do anything about it. There's no shortcuts. It takes that long. You can't make 9 women pregnant and expect to have a baby in the next month. I'm sorry, guys. Sometimes I want to use real life examples in order for you guys to understand exactly what I'm talking about. So when it comes to forex trading, guys, I want you to know that there is no shortcuts you're going to take. You have to wait for your process to end. You have to walk the journey in order for you to get the benefits. If things haven't been going your way, go back to the drawing board, understand what went wrong, and fix it. Like I told you guys, this is a business. There's no business in the world that will start from a profitable standpoint. You need to make a few errors, you need to make a few mistakes, you need to learn what not to do in order for you to know what to do and how to focus a lot more on growing your forex journey, how to actually improve your business, and that would actually take a lot of trial and errors. So I want you guys to know that you need to stay humble and focus on consistency. Don't come to forex trading because you feel like you want to make money, guys. It's not about how you feel. Maybe today you feel like trading and the next day you don't feel like trading. That's not how we go about trading. It's not about the feelings that we have. We must first of all remove our emotions. It's not about the feeling, it's about the discipline. I do what I have to do daily because I'm disciplined enough to know that I have to. Now, again, focus on the long term. This is a marathon and not a sprint. Trade frequency. How often do traders trade? Now, that is a good question. And the answer to that question is it depends on what kind of a trader you are. You can either be a swing trader, you can be a day trader, you can be a scalp trader, you can be a provisional trader, the list goes on. And what kind of trader you are determines how often you trade. But one thing you should avoid, guys, is basically having a high frequency of trading. It doesn't mean if you take 100 trades in a day, you stand to be more profitable. That's not how it works, guys. Let's get more deep into the lesson and see what we have in store. Now, the number of trades that forex traders make on a regular basis not only depends on the strategy that they utilize, but also on the time frame they trade. So now when we talk about the time frame you trade, we're talking about what kind of a trader you are. We know that swing traders use big time frames. Like myself, as you can see, I'm a swing trader and a day trader, right? I'm a combination of swing and day trading. I can also scalp here and again, but most of the time I focus a lot on my swinging side. So what we have here, guys, is one of the real accounts that we have. As you guys know, we are real traders in real life. This is the journey that we've had. I made a few deposits, and as you guys see, I've been trading and I use a suitable amount of lot size for my account. You can see the account is big enough for the lot size I use. It's still small relatively to the account, and I do make profits and I do make losses once and again. As you guys can see, I've had a few losses, but overall we grow. We're going to teach you guys exactly how to get to a point whereby you're able to trade and withdraw, and understanding what kind of trader you are, you're going to be able to make profit. So I'm more of a swing trader, as you guys know. That's how I'm able to wait for the market to play out like so. I'm expecting the market to actually push above and see if we can reach some profitable levels. So far, I do have some running profits on this trade, but I always analyze and I grow with the way that I trade. It all depends on the time frame you use. You can either be a scalp trader, swing trader, and in order for you to determine on what kind of trader you should be, that will be due to your approach. It depends on how you are as an individual. We can't all be the same. As you guys saw from other mentors, some mentors are scalp traders, some mentors are swing traders. You have to also see what kind of trader you are in order for you to be able to know what type of method you should apply. Now, guys, going forward, I don't want to confuse you guys. Once you've discovered what kind of trader you are, you need to make sure that you stick to that and you don't overtrade, especially for scalp traders, guys. Some scalp traders end up overtrading, and that is the best way to lose your money. Now, let's hear what is overtrading. Overtrading is a process of buying and selling forex pairs. It could be stocks or other securities excessively. It means you are trading more than the recommended amount. You are basically taking anything that the market gives you. You are being controlled by the market. Your psychology is not on the right path. It involves trading all day without stopping and eventually making ineffective decisions that lead to financial ruin. Yes, it means you are not trading, guys. You're actually gambling. If you're just taking a lot of trades, you don't know what you're doing and you are impatient. And as you guys know, the market takes money from the impatient to the patient. So it's very important for you guys to be patient, wait for the market to give you setups. You need to get to a point whereby you are able to follow the rules and you take trades upon your setup, not how you feel. You don't take a trade because you feel like taking a trade. You don't take a trade because you have money in your account. You take a trade because you are seeing a possible opportunity. Now, the only way to find out mistakes is to journal. Overtrading is a real thing and can affect your profitability greatly, so stay away from overtrading, guys. There's many of you guys who can analyze the market, and from your analysis, you possibly won 5 analysis, but you didn't take any trade. Now, that can also affect you as a trader. Now, you end up taking any trades that come because you felt like you're losing out. And also, we told you guys it's psychological, like your emotions will be influenced. You're gonna feel like you lost out a lot, but that's not how you approach forex. You need to actually generate trades. You need to make sure that every trade you take, you have followed all your entry rules and exit rules. That way, you are basically following your system and you are treating your trading like a business. Now, you may ask yourself, what causes overtrading? The pressure to make profits causes a lot of traders to overtrade and take marginal trades rather than being patient and waiting for the best setups. Yes, guys, like I've been saying, guys, it's important for you guys to actually wait for your setups to come through before you can actually take a trade. If you just take anything the market gives you, if the market goes up, you're taking a trade. The market goes down, you're taking a trade. I promise you guys, you're not going to be profitable. That is not how you approach trading, guys. Trading is not a gamble. Trading is a business. And if you want to be consistently profitable, you need to focus a lot on improving your skills rather than just gambling. Now, traders perform best when they only act according to opportunities the market provides, not because of their profit or loss or the need to generate income. Yes, the market doesn't care that you need money for the weekend or you need to pay your rent. It only cares about your skill. Only those who have mastered the skill to become patient and mastered the skill on trusting their system, that is a strategy, that's the only time you're going to make money. You need to know that the only money you have from the market is from the opportunities that are provided from the market, not because you are loan cash or you need to generate income. Don't come to forex like it owes you money, guys. Please don't come to forex like it owes you money. That's not how forex trading works. Forex trading is a marketplace and we make profit upon opportunities that are provided. Now, what we have next is develop a trading plan and follow it religiously. Please, guys, you need to follow your plan religiously. Don't trade with your emotions. Like I've been saying, guys, there's no way you can bring emotions in the business. The moment you start doing that, that's your key to failure. Now, the profitability of any strategy depends on taking all trade setups that occur in the market and executing them properly. So, omitting trades or not taking them properly will definitely reduce your chances of success. You guys understand? You must take trades that are part of your trading plan. You need to have a set of rules, and your trades will come from you following your rules and being disciplined. Now, worse than that, unguarded emotions can make you betray your risk management strategies. Trading without a stop loss is the perfect recipe for blowing your trading account. Like I told you guys, you need to have a set of rules. Having a stop loss is basically having an exit strategy. The market can act anyway. The market can shoot very quickly in a way that you don't have enough time to even react. So it's very important for you guys to predetermine your exit areas. Now, the ability to control your emotions is the first skill you have to learn if you want to be a successful trader. Basically, guys, through the entire FS Code 3.0, we've been talking about emotions because that is the first thing you need to learn if you want to be a professional trader. If you don't master emotions, you can sabotage your efforts. Many of you guys are actually good traders. You guys can trade, you guys can analyze, just you haven't yet mastered your emotions, and that is one of the biggest aspects when it comes to forex trading, guys. That is the one most important skill you need to master if you want to become a professional trader. Now, how emotions can affect your trading results. Most of us spend time learning forex trading strategies and market analysis skills, but don't even bother to learn the emotional aspect of trading. Like I've been saying, guys, it's very important for you guys to know how to manage your emotions, because that's where your success will come from. Many of you guys are interested in strategies and all these skills, but the first skill you need to have is how to manage your emotions. It is true, we talk more about technical and fundamental analysis, and they are more easier to learn. Yes, guys, it's more easier for you to learn technical and fundamental analysis because there's no emotions involved once you learn that. But if you want to learn on how to improve your emotions, you can open a micro account, trade a live account, and actually see your emotions come to play. And once you get to see if maybe you are revengeful, if you get angry when you take a loss, you're gonna now, like we said, follow your mindset plan. It is true, we talk a lot more about technical and fundamental analysis, and they are more easier to learn. However, emotional skills play a vital role, and especially if you want to become a consistently profitable trader. The reason most of us fail in trading is not far from lack of mental discipline and emotional control, which is very true, guys. The moment you're able to master your mental discipline and you're able to control your emotions, you are a professional trader. A trader is not about who's the smartest, who has the most skills. It's about who's able to manage their emotions. Once you get that, once you're able to turn your heart into a stone, you're a gone boy or gone girl, you are a successful trader. So why do you need to control your emotions when trading? You're gonna see that with time, most beginners will realize that emotions do not contribute anything to your trading success. Rather, it can lead to costly mistakes. Like I've been saying, guys, we make a lot of mistakes due to our emotions. Not that you don't know how to trade, it's that you haven't yet controlled your emotions. You need what we call EQ, which is your emotional intelligence. People who are more intelligent emotionally are people who are very good with running a business. And forex trading is not any different. Forex trading is a business. So it's essential to try all you can to manage your emotions and focus on the thing that matter, which is to properly engage the market without fear. Trading is a game of odds. Sometimes you win, sometimes you lose. Now you may ask yourself, how can I grow a $100 account into 3,000 USD? I am able to do that effectively because I have no fear. It is because of the confidence I have in my strategies, and the confidence I apply on my trades allows me to take an account from $100 to over 3,000 and divide and do more going on forth. And the main reason I'm able to do that is because I follow my rules. I have no fear because I trust my system, guys. You must trust your system, remove emotions, put all your trust in a system. Know your system better than anyone. And when I talk about the system, guys, I'm talking about your approach to the market. I'm talking about your trading plan. I'm talking about your mental discipline, right? I'm talking about you being able to prepare for the market and being able to trade like a robot. The reason we don't use robots is because robots are not consistent. The market will adjust. And the reason why you need to actually be a self-reliant trader is because you're able to adjust whenever the market starts to make changes. Once you see a stop loss, the market will forever teach you, right? Once you take a stop loss, I can understand that the market is forever teaching me what to improve and what to adjust going on forward. The market is a marketplace that we live in today. The economy is forever changing, hence a robot can't work. You need to be an individual so that you can adjust to the recent changes. Now, let's continue to the next slide. I'm just going to give you guys a small summary, the overview of our lesson, and we're going to continue towards the next lesson. Now, the number one thing you need is to have a strategy that has an urge in the market. Like I told you guys, the reason we're able to profit overall is because we have an urge. Let me show you guys an illustration. So as you guys can see, I'm saying I understand that I'll never have 100% win rate. I just want to make sure that I have more wins than my losses. As long as my wins are more than my losses, I have an overall profitable ratio. That's all you need, guys. You just have to have an urge on the market, and that's how you're gonna be forever profitable when you trade the forex market. More winners than losers, or bigger winners and smaller losers. Like I showed you guys on the demonstration, you just have to make sure that your wins are more than your losses, and you're gonna have an overall profitable journey. Your strategy must include the rules that clearly define the criteria that must be met before you engage in the market. That's when we're talking about your entry points. You need to make sure that you follow the entries from your strategy. If you don't have a setup, you don't have a trade. You don't trade because you feel like trading. You trade because you have a setup, and a setup comes from an opportunity that the market has provided. Now, with that in place, you shouldn't concern yourself with the outcome before placing a trade. And even after a trade, the results shouldn't bother you. It has nothing to do with the next trade you're going to take. Yes, guys, you need to basically eliminate your emotions when you trade the forex market. Find a way to push your emotions away. Yes, I understand that you can't avoid emotions, but we said we have a mindset plan that will help you find a way to overcome those emotions, right? You're trying to find a way to combat. If, for example, you know that whenever you trade, when you lose, you get very angry, you have to find a way to combat that. And how can you do that? If you get angry after loss, then it's very important for you to step away from the market. Let the market be. You must calm down first before you come back to the market. It's like, for example, let's say you are fighting with your parent or you're fighting with your partner. If you are fighting with your partner and you get angry and you end up continuing the argument while you're angry, it's going to end up becoming a bigger problem than what it was originally, because you engaged with that individual with emotions. But what can you do to improve that? Whenever you're angry, you just have to be like, okay, let me calm down, let me step away and reassess myself, and then I'm going to be able to address the matter in a clearer mindset, because that is the best decisions. There's no best decision you ever took when you are influenced by emotions, guys. This, from myself, I can be honest, I haven't made a great decision when I was influenced by my emotions. So the same thing applies to your trading. Profits shouldn't bring you joy, neither should a loss bring you sorrow. Do things like a robot. Like I told you guys, by saying do things like a robot is trying to eliminate the emotions. Try to have a response in every situation that you have. Never entertain the feeling of achievement when you're in front of a trading screen, as this may lead you to making unnecessary mistakes that will affect your profitability. Yes, usually this is saying in my language that say too much happiness will bring tears, right? That is a direct translation. And by that, guys, I hope you guys understand that usually when you're too excited, you are opening room for sadness, because you're gonna act a lot out of excitement, and that will put you in a very bad state. So it's very important for you guys to balance yourself as an individual. Try to balance your emotions, and you're gonna see once you apply those things in your forex journey, it's gonna be easy. Guys, forex trading is different from how we approach life. The reason many people fail in forex trading is because they're trying to approach forex trading the same way they approach life, and which is completely different, guys. When it comes to finances, life and finances are completely different skills. Please understand, life and finances are completely different skills. You need to approach these two aspects differently. For instance, you may be excited about the last win that you failed to identify the next trade setup, or you place another trade when your trade criteria have not yet been met. Yes, that is possible because you're too excited. You don't really care anymore if you're following your rules. It's all about, yeah, I'm happy, I just want to place my trade, I'm making money, I'm the king, I'm the best. And that's what happens, guys. Usually when you trade the forex market, you become too excited that the wins go to your head. And now you're going to start feeling like you're bigger than the market, and the market will take you immediately towards the downside and bring you down. Understand that whenever you're happy, take your happiness, take your win to the side and enjoy it. Don't bring those emotions to your forex journey. As well as losses, guys. Don't let losses go to your heart, because that can easily put you in a very bad place. Similarly, after a loss, you may be worried about being wrong again, that you missed the next trade, and if the setup ends up a winner, you'll start regretting why you never took the trade, which is a fear of missing out. Now you're scared that you missed the trade. You're now taking trades that are not even ready, because you want to basically pay back what you've potentially lost. You know what I mean? So it's very important for you guys to balance yourself emotionally. There is no shortcut to becoming a consistently profitable trader. Yes, guys, there is no shortcut. Please follow all the rules that we teach you guys. Please follow all the tips, and please follow all the educational content that we give you guys. Please follow all our advices, and we promise you, you are going to be the best trader that you can be yourself, right? This is not about you becoming better than anyone. This is just making sure that you're becoming the best version of yourself. Thank you guys so much for tuning in. This is FS Coach Your Mentor. See you guys on the next lesson.